Wednesday, July 12th, 2023, Monaco 64, home of alternative economics and contrarian views. Beware of government reforms. That's what we're going to look in today. And beware of Jeremy Hunt and the private equity hedge fund vultures. They're after your pensions. Yes, and reforms. Anything, any government, be it conservative or labor, anything they ever do creates the opposite effect. And why is that? Well, because they have very little accountability and they use other people's money, the old OPM. And I saw this article this past weekend, and I read it and I thought, well, this is going to lead to a big pension time bomb, having politicians decide where our money, our private pension monies are going into. And then I looked also in the last few days more into this reform. and Jeremy Hunt, I think he made a speech, was it yesterday at Mansion House? It's a annual speech by the Chancellor in the city of London. And Mansion House is actually right next to the Rothschild headquarters, NM Rothschild. I used to walk around there regularly when I worked in the city. You probably know if you've worked there or been there where Mansion House is. And I think it's worrying. And why? Well, private equity hedge funds usually have been investments for the very wealthy. You need to be an accredited investor. And what does that mean? Well, it means that you have to have, it probably has changed now, but I remember in the past, if you had liquid assets of more than $1 million, for example, you were allowed to invest in these more risky asset classes, if you want to call it. Same thing for hedge funds. So now they want to take your hard-earned savings in your private pensions and funnel it into private equity and hedge funds. And I think that's very dangerous. And one thing that's a bit worrying is that you look at the headlines about private equity, and private equity is basically the old leverage buyout from the 80s, the corporate raiders. These people are vultures. They come in with cheap financing. They buy out a perfectly good company. They strip all the assets and then they leave the bones and they collapse and they take in all the meat. The workers lose their jobs, and that's what they keep doing it over and over again. So now Jeremy Hunt wants to work with these people, which is sounds crazy, but if you wait a second, I'll tell you why it's so. But if you just have to Google private equity troubles, and you get loads of news from this year and last year. The first one here, what's wrong with private equity market and how to fix it. Private equity's biggest problem, this is from the FT from September last year, is the private equity industry constructing a giant pyramid scheme that could be bad for business. Private equities loved assets turn, problem children in downturn. AJ Bell founder warns unprofitable investment platforms face trouble. And the thing with private equity investments, they're private, not in the stock market, not in the public market. So it's very hard to value those assets. It's very hard to liquidate. And here you have Jeremy Hunt. There you go. Jeremy Hunt's Mansion House reforms seek to channel pension savings into unlisted firms. The flagship element of Hunt's initiative is a compact signed by 9 of the UK's largest pension providers to commit 5% of their so-called default funds for defined contribution pension savers to unlisted equities by 2030. Defined contribution pension funds where retirement payments are based on investment returns invest only 0.5% of their estimated 500 billion of assets in unlisted UK companies, limiting the pool of funds available to private companies, including startups. So again, risky investments. It's interesting, though, that we've seen people in the mainstream media come out now and say, wait a second, what are you doing, Jeremy Hunt? So we have Philip Johnston from The Telegraph. He says, our pensions are now piggy banks for the Chancellor's pet projects. Governments are fond of tinkering with retirement plans, but this usually ended in economic tears. Yes, it's not just investments and retirement plans. It's everything they do. Government touches. The welfare state becomes a dependency state. The National Health Service becomes the National Hazard Service. That's badly mismanaged. The war to end all wars over 100 years ago hasn't ended all wars, and I could go on and on and on. And I also saw Marion Somerset Webb, who used to be quite more contrarian, I would say, but now she writes for Bloomberg, which is for me a problem. She used to be the editor of Money Week, and I used to enjoy that magazine many years ago. But she noted, I think it was yesterday or the day before, this will end, hashtag this will end in tears. There you go. The UK government has unveiled a range of proposals to divert 75 billion of pension cash for high growth business. Central to the plan is a voluntary commitment by 9 pension providers and schemes to invest 5% of assets in private market assets that help the UK economy. Yeah, it helps the private equity vultures because they're running out of financing. The banks don't want to finance them anymore because interest rates have gone through the roof. The banks don't know how these assets are valued. They could be sitting on huge losses, and you can't really trust the private equity to value its assets, I would say. And it's not just a defined contribution they're going after. It says here in the FT that they're going also, they're looking for local government schemes, people who work for the government, to put some of that money into private equity. And I think also the defined benefit, which is usually government and company schemes that pay out a defined benefit at the end of the person's working life. That's 1.4 trillion. They want to tap into that as well. So why are they doing this? Why do they want to save the private equity and hedge fund moguls? Well, this is from Open Democracy. I've never followed them before, but I try to find something about these private equity and finance tycoons, and they call it. And this is from September 2021. Tories rake in £11 million from hedge funds and finance tycoons. Exclusive financiers accused of buying unparalleled access to the very heart of government as scale of Conservative Party's reliance on city donors revealed. It also says here, this from Margaret Hodge MP, Britain's hedge fund bosses and private equity partners could be seeking to influence a new round of deregulation. Am I for total regulation of things? Not really. But I'm also not for the government pushing people's pension fund managers into a certain kind of asset. I think people should be left alone. The government should interfere a lot less. And I think the pension could be anything. It doesn't have to be an investment in the stock market, in the public markets, or private equity market. And that's why I tell people always that you should try to have some real hard assets, especially liquid assets outside the system, like gold and silver. I won't tire of talking about gold and silver because I think it's really important if they're able to come through these reforms. So yeah, and if you never bought gold and silver, go to the description of my video below. I've got affiliates, not just in the UK, but also in the US. It's always good to have a little bit of gold and silver outside this political system. It's a political system. And you can contact my affiliates if you never bought gold and silver and talk to them about it as well. But so this is what's going on here. And in the US, I think it's more advanced. So we're again following what the US does. This is from February 2023. It says US pension funds are on the brink of implosion and Wall Street is ignoring it. So let's quickly go through this. As public officials across America prepare to funnel even more of government workers' savings to private equity moguls, an alarm just sounded for anyone bothering to listen. It is a warning that Wall Street executives busy skimming fees off retirement nest eggs want you to ignore. The longer the warning goes unheeded, however, the bigger the financial time bomb may be for workers, retirees, and the governments that pay them. So there you go. Jeremy Hunt wants to go the American way. You can bet that these private equity moguls or hedge fund moguls, if everything hits the proverbial fan, they will be okay. They will probably even get a bailout and you'll be left holding the bag. So beware. Jeremy Hunt and the vultures in the city and on Wall Street, they want to come after your pensions. Beware. So with that, let's quickly look at where the markets are this morning. I'm a little earlier today. It's 7:36 a.m. London time. So we've got spot gold continue to trade higher here. We've made a new recent high today at 1941 right now. We're trading at 1936. We're up about $4. The low's been 1932. Silver's up 10 cents at 23.22. High's been 28. The low 05. Dow futures is up 15. NASDAQ 100 future up 25. S&P up 4. To the currencies, and many of you, of course, are probably surprised why is the British pound so strong? We're almost at 130. We dropped to 103 last year. Well, as I've always said, fiat currencies are all sinking, and a lot of times they take turn against each other to move up and down. In the end of the day, they're all going into what's called worthlessness, really, versus real things. Be as it may, I guess it's not a bad thing if you have UK investments or if you have a property in the UK. The pound's a bit stronger. So we're at 129.64, up 0.25%, so approaching 130. The euro is up a quarter as well. It's approaching 110.50, and the dollar is dropping quite sharply here versus the yen. Is down 0.75%, 139.37. The dollar's down a third as well versus the yuan at 719.15. To the other currencies, we got the Aussie dollar up about 0.5%, 67.15. The dollar's down 0.2 versus the loonie at 132.05, and the Kiwi dollar is up 0.33% at 62.22. To the commodities market, We got crude oil down about 0.2% at 74.60. That's WTI. Brent is down 0.2 as well at 79.10. And just look at this long-term chart of crude. I think crude is ready to take off. I could be wrong, but it's broken through this falling wedge, and that's usually very bullish. I could see crude going towards 100 before the year's end very easily. Platinum is up $5, trading at $9.32, and high-grade copper is up 0.2% at $3.79. We'll quickly look at the U.S. Treasury market. Today we've got CPI data from the U.S. That will be, I guess, interesting to look at. The 10-year yield is down 3 basis points at 3.95. So I think the CPI data could set the tone for the bond market. And again, interest rates are probably, and bond yields are probably the most important indicator for the whole financial system. And we need to keep a very close eye on them. The UK market is not open yet, the gilt market. So I'm not going to report on it, but suffice it to say, yields are still highly elevated. We're above where they were last year during the autumn crisis, but they've kind of stabilized in the last week. But we need to keep a close eye on them, of course. So with that, I'm going to wish you all a very good day. Take care. Bye.